Good morning, guys, and welcome to the podcast. I'm really delighted about today's guest sponsored episode, Dr. Bryan Jepson from Colorado. And he is a physician. He's also author of the Physician's Path to True Wealth. He's a blogger. He's also a advisor at Targeted Wealth Solutions. So I'm a big advocate of the physician community, supporting them, and we'll talk about mindset and wealth and financial freedom. So I'm really happy to have him on. Bryan, welcome.
Thanks so much. I appreciate you having me.
Yeah. Briefly introduce yourself and we'll dive into the questions.
All right. Yeah. So I'm an emergency medicine physician. I've been working in that field for about 30 years. I'm now very part time. Over the last, I don't know, 4 or 5 years, I saw the writing on the wall a little bit and realized that I was ready to start thinking about a non-core career or transitioning out of medicine altogether. And that kind of coincided with COVID to some degree. I was feeling it a little bit before that, but when COVID hit, I just felt like it was time for me to start exploring. And I thought about what are some of the things that I could do if I wasn't being a doctor? I wasn't ready to retire mentally and just hang it all up. Still felt like I had a lot to contribute. I always had a lot of interest in personal finance and decided I just want to dive more into it and just learn on a deeper level. Went and got a master's in finance and entered that without really having an agenda about what I wanted to do with it. But the further I got into it, the more I realized that it would be really fun to be an advisor to physicians in particular. I think that since I'm one of you, I can speak both languages and being a financial advisor felt very familiar because like physicians where we're counseling our patients and trying to break down more complex information into bite-sized chunks and with a kind of step-by-step things to do, it felt very familiar to me. And so I became a CFP and kind of went from there.
Yeah. Fascinating. And to top it off, I coach physicians with mindsets and wealth and finances, and the cohort is quite different than just your average Joe and
For
general.
sure.
So, what are the most common struggles or needs or pain points? What are physicians coming to you for? Obviously, they're dissatisfied with their current position. So, what do they come to you for?
It's different for everybody. The young physicians come loaded with debt and a large negative net worth and wanting to know what the best path for them to get out of that and have a successful financial career. As the mid-career physicians, a lot of them are their student loans are paid off or mostly paid off, and they're starting to have their net income growing, and they're trying to understand what all the financial implications are of the decisions that they make. And there's a lot. Many of them are starting to think about retirement at least, and or getting burned out of their current position and looking for alternative approaches to doing things. And then the late career physicians are it's all about when can I retire and how can I make it through that and to have the income that I need and to maximize basically my life moving forward. And so everybody has a little bit of nuances. I also have a special needs planning certificate because I have a special needs adult children. And so I have a lot of my clients have special needs in their family, and that brings a lot of kind of different traps and pitfalls that you have to be aware of. So,
Yeah. Interesting. And given the needs of the physician client, what services, products, advisory solutions do you offer to help address these needs?
we're a fee only financial advisory firm. And so basically what that means, if you look at all the world of financial advising, they haven't done a great job of defining what a financial advisor is, honestly. So almost anybody can call themselves a financial advisor as long as you take a regulatory test, and that takes a few weeks to prepare for. But the biggest divisions are fee only and fee based. Fee based advisors are more the insurance. They work for insurance companies. They work for mutual funds. They make commission essentially on what they're advising you. And to me, they're more salespeople than advisors because their fiduciary duty is a little bit different. They just have to do something that's reasonable for you, not necessarily what's best for you. And of course, the most reasonable things are the things that they're going to make them money. So I think it's important as you're looking at financial advisors to know how they're being paid. So a fee only advisor, you're paying for advice. And we don't make commissions on anything that we're advising you on. And I make a flat fee for comprehensive financial planning.
Mm.
And that includes not just investment management, that's every aspect of your financial life. So that's going to be tax strategy, it's going to be invest insurance, looking at your insurance, but I'm not selling it. I just want to be sure that you have enough. Looking at investments, looking at debt, looking at charitable giving, estate planning, all the things that we all deal with or have questions about. A good financial advisor can help create a plan and help you work through all those questions and issues that arise from that. So that's what I like doing the most is the planning. Now, we do offer some investment management, asset management for people who want that,
Mhm.
but you certainly don't need to for us to do that for you to access our services. I think the value is really in the planning.
Interesting. The other question I have for you is what sort of, because some of my clients, they come to me not knowing like what a P ratio is or just difference between the ETF versus a mutual fund. What sort of baseline knowledge should clients be knowledgeable about before working with you? Particularly like in real estate, stocks, equities, insurance, etc.
Yeah. It's a great question. And honestly, I love working with educated, financially educated clients. I think that creates the best partnership with a financial advisor. Just when you have a patient that you, as a physician, that you're trying to counsel with, if they know zero, they're not going to follow through very well with or understand what you're even talking about. And so they're less likely to actually implement your advice. And so to me, that's why I love working with doctors actually, is because doctors are smart people. They're invested in their own finances and they want to be successful. And so I really like it when doctors come to me with questions and with basic information. I think that a lot of this stuff you don't need to know all the nuances of to have a successful financial plan. That's where I can come in and help and educate you and answer those questions. But I did write a book that kind of has that kind of stuff, that baseline stuff in there that I
Mhm.
think everybody should know. And if you have that amount of knowledge, especially if you pair with a financial advisor, or then you go deeper as a do-it-yourselfer, if that's your preference, then you're going to be really successful financially. And the book is called Physician's Path to True Wealth, and it really covers the 12-step path of all the things that you talked about without getting too far into the weeds. There's a lot of weeds in finance, and you can spend a lot of time learning all the stuff, but most of it is not gonna ultimately be required for you to be successful.
Yeah. The other problem I see is because doctors are so intelligent and educated, and sometimes that can actually get in the way because a lot of my colleagues, they complain that they're like, yeah, I try to help you and I try to give you the information. They're analytical, so it gets in the way. And so, how do you deal with this idea of being so analytical and in the weeds versus actually implementing and taking action on the ideas and plans?
Great question, and it is an issue with physicians, but that's what makes us who we are, and I think that's why I'm probably successful as a financial advisor to physicians is that I get that part of it. But I think the biggest thing is you have to start with the big picture, because if you don't have the big picture in mind, all the little things that you're analyzing is just noise. So you really have to know where you're going. And I think that's where a financial plan can help is that it says, okay, what's my long-term plan and where are my goals? And what do I need to accomplish those goals? And most of that is fairly straightforward and fairly simple. And you don't have to know all the other stuff. And you're right. Lots of times when you spend too much time looking at all that stuff, our behavior finance is a fascinating field to me, but our behaviors get in the way. We get in our own way of our own success. A classic example is more often the people who trade the most do the worst in the market. I think that just tells you the example of if you're getting too much in the minutia of everything that's going on, you're likely to make things harder on yourself.
Yeah. Yeah, and it's a great point because, for example, I have some clients, they're like, they have no idea about like ETFs or just the basics, and all of a sudden they wanna trade, options or futures or get into, like,
Exactly.
dangerous things like cryptocurrency, just
Yeah.
very and that's how they lose all their money.
Yeah, and that's a doctor problem. It's not just a doctor problem, but it is a doctor problem because we hang around in the doctor's lounge or whatever, and somebody's talking about crypto or somebody's talking about options that, and if you're new to finance, you just say, "Okay, I've got to do options." And then it's without even showing up the basics. And you're right, that's a very common way that doctors get into trouble.
Yeah. And then, alignment with that is a lot of people are, for example, I don't know if you get questions from clients, it would be interesting to get a pulse, but if you get questions around Bitcoin or just like digital assets and do doctors need to be in this space or can they just do the tried and true approach and do very well?
Yeah, we do get some questions on it, but and the answer is no, you don't have to be in that space. And yes, you can still do very well without it. It's just like any investment, it comes with risks and potential reward. And you need to understand that for each investment that you engage in. And crypto happens to be a very high risk, high reward, speculative type investment. And so some people do super well and they guess right and it goes great for them. Very often the next week it's hurting again. Or you get in on the backside of those people that have done very well and then things change. And so you really have to understand. So when I talk to my clients, I want to be sure that number one, we're well diversified. Number two, we have enough safety built in so that they're not just riding the most severe waves of the market, whatever market it is that we're investing in. And because you don't want your retirement hinging on a few good investments.
Yeah. Yeah, I love that. The next question I have for you is with doctors, because you mentioned a lot of them, for example, either living paycheck to paycheck or income or taxes or just what's the number one struggle with doctors? Is it wealth preservation? Is it just trying to keep what they've earned, avoid the government taxing them? Talk about like the money problems of the doctor.
I think that the biggest long-term problem that doctors have is lifestyle creep, where because it's taken us so long to get through school and we've been delaying our gratification for such a long time.
Yeah.
By the time we get done, we want to live like a doctor. And or if you're newly out of residency or whatever, and you're rubbing shoulders with your colleagues who have been out for 20 or 30 years and are in a different place financially, you see what they're spending and you feel like, wow, I make the same as they do. I can spend the same amount. And so I think just not being intentional with your financial future, whether that's not engaging a good financial advisor or not learning it all on your own in not just the Bitcoin part of it, the entire financial picture, or not being consistent where you're investing early. Just some of that stuff that if you could delay spending for a few more years and invest that down the road is going to make a huge difference for where you are when you want to retire. And so a lot of doctors who haven't done that and then they're in their 50s and tired of medicine realize that I need to keep working to sustain the lifestyle that I've created. And
Mm,
then that's where you're stuck when you've got the golden handcuffs on.
mhm.
Options are limited at that point because you just don't have the same amount of time to recover.
Yeah. You mentioned a very interesting concept, basically living beyond your means and just keep up with the Jones. And then you alluded to this idea of the power of compounding starting early. And if one, I think Warren Buffett was saying compounding is the greatest power. Besides compounding, what are some other secrets to wealth preservation? I know you mentioned diversification, but how can physicians protect what they've earned?
I think I think that there's lots of answers to that question, right? So, yeah, compounding interest, the power of compounding interest is the greatest wealth creation tool of all time.
Yeah.
And that's because it grows exponentially. So when you're young, if you just keep putting money in and keep putting money in and it doesn't feel like it's doing anything for you or your curve is very flat, it feels when you're approaching retirement, if you've done it, that curve should be growing exponentially. And that's when that happens, you're no longer reliant on your paycheck, right? So your investments are making more than the income that you're creating from your job. And that's when you're free financially because you can do whatever you want at that point. And but to get there, it's being consistent and being patient. And that's the hard part is you get all this get rich quick stuff, is peddled out there, but wealth creation is actually boring. It's I just got to be consistent. I've got to save. I got to invest what I save. I got to put it in a relatively safe investment, but you also have to take some risk for it to work. You can't just put it all under a mattress because you're not going to get there either that way either. But understanding the risk, understanding your time frame, and then with your question about insurance, yeah, life has a way of derailing us. Things happen to everybody. And that's the thing that I know learned the most as a financial advisor is when, you're talking to individual families.
Mm.
They all have their own little thing that's different about them that you need to be able to work through.
Yeah.
And so just being able to get through that, being sure that you're adequately insured so that life doesn't throw you a curveball that you can't recover from.
Yeah.
And then once you're on the path, then you can start thinking broadly and say, okay, how do I give back to others, and how do I protect my children, and how do I make them be successful, and all the things that once I use the analogy of the oxygen in an airplane, right,
Mm.
where they always tell you to put the mask on you first, and then help the person next to you. But once you have your own finances shored up, it opens the world for you to really make a difference. That's a great feeling to be able to do that.
Yeah. I was listening to one of the podcasts from like some of the world's greatest investors, and I think it was Sir John Templeton, and he was saying that his number one secret of all the wealthy people he helped was they did asset allocation. So they had a portion in like very safe, very stable, and then had the growth and
Yeah.
etc. The next question I have for you is for doctors, because you mentioned starting early, but for example, I I was another client of mine, he's in med school, but he's got student loan debt, but he's saving. He's putting a couple hundred a month in a Robinhood account, just index ETF,
Awesome. Yeah.
but the common thing I read on these blogs and forums, these doctor forums, is they say, "Oh, you should get out of wait till you pay off your student loan debt, then start saving." And I'm like, it takes you like probably 20, 30 years to pay off your loans, and by that time you missed out on all this compounding. So should med students start saving like even when they're in debt, or should they just pay off that debt? How do you answer that question?
Yeah, I agree with you. I think it's a mistake to wait to invest to pay off your low interest rate debt. So when I'm talking about debt with people, high interest rate debt like credit card debt, pay it off. Before you invest, pay it off because if you're paying 26% on a credit card, you're never going to consistently, predictably get that in any kind of investment that you're doing, unless it's just a crazy high risk investment that you don't want to be involved in anyway. So that's automatic 26%. So pay off high credit card debt, but the long-term debt, your student loan debt that's relatively low interest rate, it's great to have that paid off and it feels great, but the numbers always work out better if you invest money early
Yeah,
instead of paying off that debt early.
yeah,
And when I counsel my clients on that, it's like, a lot of that comes down to once they're on a path and they're saving good and they have their 401k maxed out and all that stuff going, and then they have extra money, they'll say, okay, should I invest that extra money into a taxable account, for example, or should
yeah,
I pay off my debt? And that's what I tell them is I say, the numbers will always tell you you're probably better off to put that money in an investment account,
yeah,
but it also feels really great to be out of debt. And so, mentally and emotionally, that may be an emotional or an emotional decision rather than a numerical one. And
yeah,
I haven't met anybody that was sad that they were debt free. So it feels good to do that because then you can use that money for other reasons or other things. But
yeah,
yeah, you're behind the game if you wait until you're completely debt free before you start investing.
yeah, yeah, yeah. I'm just some of these when I'm on these forums and blogs, I'm just amazed at just like the amount of misinformation and
Yeah.
just. Well, I know we have a very interesting question. How can people contact you, connect with you? I know you're on LinkedIn, and how can people, if they're interested, contact you and work with you?
Yeah, you bet. Couple ways. I do have a website. So it's bryanjepson.com. And so I have a blog on there, and you can actually get a download a free copy of my book on there if you want a digital copy. Or you can contact me through Targeted Wealth Solutions. So that's the advisory firm that I work for. There's links to that through my website as well. So, if you get to one, you'll get to the other. But Targeted Wealth Solutions is our company, and you can connect with me on that. And I'd be happy to talk to you about becoming a client or exploring what that means.
Yeah, excellent. Thanks so much. I really enjoyed this talk, and especially we both serve the doctor community, and it's again we understand what people are going through. So it's really great to produce this show and content for the audience.
Yeah, thanks for having me, and thanks for what you're doing. And I love it when other physicians are educating physicians about finance in the right way.
Yeah,
And because I think that it does make a difference, and physicians are interested and they want to do things correctly. And I think that more content that is directing them in the right way is the more the better. I mean, it's good. As physicians, we're lucky. We are fortunate that if you do things the right way, you have a really great opportunity to become financially free at some
yeah,
point.
yeah,
And it's great to be part of that for people.
yeah. It's what you. The best thing is it's not how much you make; it's what you do with it that makes
Exactly.
the difference. Again, thanks so much, and keep up the great work.
Okay. Thanks. You too. Take care.